Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to do a NASDAQ report update today, NASDAQ 100. We've talked about this on and off for the last couple months because it is a market that's well, it's been down. The primary trend has been down for 8 months, and an 18% gross profit on that. And because we've been talking about whether or not this is going to accelerate to the downside at any point. Some of this, we frame this discussion within holding important lines in the sand. And now, after the Fed meeting, and actually, I don't put much credit into any of that stuff, the invisible hand is positioning to do what it's going to do before the Fed speaks. If the Fed was all powerful, it would get what it wants. It would control inflation. It would send the stock market higher. It would take all the pressure off because there would be no criticism then. They're just a player, just like you and and I think that we focus too much on what they're doing. But what we should be focusing on is the NASDAQ 100, and that is playing around with some critical reversals. We're going to talk about those today. We're going to talk about a little bit about the energy build, even though that's not as important. The primary trend is down, but the composite trend has reset. That's what this R here means. That means that we have the three time frames in agreement down. The computer scores it as mid-cycle. I've talked about this on the matrix update. Its composite score is 0.0 or 0.1, which is a mid-cycle composite score. Might seem like, well, that's pretty old. I want to stay away from this, but it really isn't. Anything above 0 is considered mid-cycle, but it's a relatively early mid-cycle. Early is anything below that. Early is way easier. The problem is when the NASDAQ 100 reset several times and did some early resets. I'm pretty sure a lot of people didn't play along and escalate trading in other core positions. The core position really is something that was established 8 months ago. So any bullish discussion right now really is ignoring the primary trend, which is dangerous because the primary trend is here. We're going to talk about the cycles in a bit, but you're going to notice that then none of them are really extended. The only thing that's showing a little bit of extended time cycle is 41 months, but this is not unbelievable. The price cycle is not unbelievable. This could easily continue downward, and this is the real risk. I know the bulls are calling for a rally because we're going into a seasonally strong period, but seasonality flies out the window when you're talking about the invisible hand. It is just a